Good evening. This is Duane Lowry for the DPP Grain Desk. It's Sunday, August 25th. It's currently 5 in the afternoon. The outlook tonight, we're going to be higher. I'm not sure to what degree. Weather is going to be the driving force. Price action last week was supportive. Price action Friday was supportive. Weather has been a concerning backdrop most every day, even the 1 or 2 days that we've experienced some downside price action at different times. The weather has really never changed from being a concerning factor. Weather tonight offers little precip for the Midwest this week. Any precip opportunities that exist either this week or next week will tend to favor far northern areas. Next week's rains, if they were to come as forecasted, would tend to favor something west of Iowa. If you look at the temperature outlook for this week, it's going to be very warm. It's going to be humid, so I wouldn't be surprised if we had some surprise rain event develop. But there's the forecast that offers little hope for moisture this week. I think the bottom line is we have too many acres in the Midwest that are too dry, and the prospects for rain are limited. We also have a situation where the marketplace, right or wrong, has been very bearish, especially in corn, very optimistic towards yield potential, overly optimistic, I would argue, based on planting dates and the troubles early in the season and things of this nature. But prior to parts of last week, and maybe prior to even tonight in the case of some, most people have not wanted to embrace concerns about weather and crop concerns as far as it related to corn. All the concerns from the weather-dominated fundamental focused traders has pretty much always been focused on beans. I think the Pro Farmer Tour last week, regardless of what numbers they put out, I think the comments that you picked up from the tour from producers as the week unfolded, I think there was a general theme that I took from it, and that was that the corn yields, even in the areas where they expected to find good crops, they weren't quite as good as what they had thought. The soybean theme that I took away from that, all the comments from last week, was that we have a soybean crop that's well behind normal in many regions, not just in parts of the West. And I think that the low pod count can be passed off as maybe crops behind normal. We still got an opportunity to add to that. They're still flowering. I agree with all that. But we are approaching the point on the calendar where if you're going to talk about additional pods and optimum fill in the beans, you got to have moisture, and we don't have that right now. And I think you got people legitimately concerned that if the weather doesn't change, rather than talking about maximum fill, you're going to be talking about reduced fill, reduced pods, and the soybean balance sheet can't handle a lot of adversity from the last USDA starting point, if you will. And I think that people are legitimately concerned, and I think the fundamental analysts looking at the soybean crop right now with the current forecast are going to elevate those concerns tonight. So we're going to be higher, and even though we were up 40 cents on Friday, we could have another sharply higher day tonight here in the soybeans. And I think the other thing to anticipate here for tonight and this week is the corn market, which has been reluctant to participate and quick to have people want to poo-poo any rally attempt. I think that that's going to change tonight and this week. I think you're going to see more aggressive short covering. You're going to see the market strive to try to push above recent highs. And I think as that happens, I think there's a lot of short covering energy here that we can unfold. There's a lot more upside potential than what people think. And I think on the producer level, they're starting to get more concerned about a loss of production potential in corn. Now, it can be argued that we may not lose enough to have a material impact on the balance sheet in terms of having a more abundant supply than we've had in recent years, but there's a certain process that has to go through when the market's experiencing a short covering phase. And we all have talked about here before how aggressively and too aggressively short and bearish and too bearish the trade has been in corn for the last several weeks. So the upside potential here is pretty good. That being said, this rally phase that's ahead of us, this short covering, we hope that offers some great hedging opportunities and selling opportunities because I think you are dealing with a situation that this next marketing year is the type of marketing year where you're going to want to have price protection strategies on. You're going to want to look for opportunities on strength over the next couple of weeks to find those hedging opportunities. And as far as how much potential we have here, from where we settled on Friday, which these corn at 470, I think 30 cents is very easy to and reasonable type of statement to anticipate for additional upside potential. I wouldn't be surprised it's 50 cents. Where you start adding 30 to 50 cents, now you're talking about July futures 530 to 550 range. I think that's a type of price level that producers can work with. Now, it may not be what we want to see, but it might be reasonable for the overall fundamental outlook that's ahead of us. So I think that while we get excited about weather markets and price strength here, don't lose sight of the fact that these are creating, hopefully over the next couple of weeks, some opportunities to get some pricing activity caught up. These will be some of the best prices you've had offered since earlier in the spring. Hopefully, if we can get back up to there. As far as beans are concerned, I'm not sure how much more upside we got, but for beans to add another 50 cents or even $1 is not unheard of in a weather market with the current backdrop that we have. So I don't think it's important to try to figure out where beans are going to the upside. Just realize there's still more upside potential to go. It's possible that the timing of this type of market that we have this late in the season, still focused on weather, and the trade's beginning to believe we've got a loss of production numbers, we might see a situation that the market is firm into that September USDA monthly supply and demand report. So we have a couple of weeks here where the market can benefit from weather, benefit from short covering, and get some strength. And I think that's what we look for starting tonight. I think the emotions will pick up. It'll probably be most presented in the case of corn, because I think there's going to be some catch-up short covering activity to occur there. And so I think producers need to start analyzing where are you willing to make some more aggressive sales, where are you willing to put on some hedges for inventory that you plan to store this fall. Start to map out where that might be. As a general rule, hopefully from Friday's close we got another 30 to 50 cents of potential where you can get that type of opportunity. For the DPP Grain Desk, this is Duane Lowry. Thank you.